So, hello everyone, I'm Atharva Kale and I welcome you all to the first episode of season 1 of Compliance Café. And in today's topic, we are going to discuss a topic that every company dreads but must deal with, that is Form DPT-3. It's annual, it's mandatory, and it's often misunderstood. So, to make it simple, we have invited a seasoned professional, CS Grishma Malvankar, to help us break it down. So, welcome to the show, Grishma.
Thank you so much, Atharva. Glad to be here and talk about something that is small in form but big in consequences.
So let's build the foundation, let's build the basic, like what exactly is DPT-3. I'm sure viewers will be curious about this, like what is DPT-3, why it is to be filed, what are the deadlines or timelines through which a company can, make themselves secure and avoid those penalties in case, if any.
So, sure. Atharva, DPT-3 is a form through which company reports its outstanding amount of money or loan, whether in the form of deposits or categorized as an exempted deposit. As you have asked why it is required, so the key objective of DPT-3 form is to provide information to the ROC about all kinds of financial liabilities that company has taken, whether in the form of loans, advances, deposits, whether they fall into the category of deposit or not. And talking about the timeline, so the timeline of DPT-3 is 30th June of every year.
Okay, so as you mentioned that the form has been categorized to form like something which term as deposit and the other part which we termed as exempted deposit, right? Okay, great. So now that's interesting. Well, with that brings to our next question, that is if it is to be filed, like it is there is deposit which are to be filed, there are exempted deposit to be filed, then who are the companies actually who are supposed to file these deposits or the return?
So it is applicable almost to all companies, whether it is OPC, small, non-small, private, public, listed, except banking companies, non-banking financial companies and housing finance companies.
Okay, so banking companies have been exempted in this.
Yes, correct.
Okay, so just a query which I am having right now. If banking companies have been exempted, so there is a relation mostly we can see that where banking companies are exempted, insurance companies are also exempted. So is it like that insurance companies are also off the hook like banking companies for filing this return?
Okay, since insurance companies are not explicitly exempted under Companies Acceptance of Deposit Rules 2014, so insurance companies, in my opinion, they require to file DPT-3.
Okay, so since they are not explicitly expressed over there, they are supposed to file. Very well. So now coming to the next question, like you just mentioned, the DPT-3 has to be filed with companies, every type of company, other than the exempted companies now. So in case suppose there is a situation, there is a company who is not having any borrowing or there is a nil return. So are we supposed to file? I just have this query since a long time. I believe a lot of CA friends of mine have been asking this query, like if the company like nil return, so are we supposed to file this deposit return or it is like, since this nil return, so we are not supposed to file this return. I hope everyone must be aware of this question.
So nil return is not mandatory. However, if company has taken any loan during the financial year and subsequently repaid them, then in that case it is required to file DPT. But nil return is not mandatory.
Okay, so just to make myself clear, if in a financial year the company had no loan, so we are not supposed to file this.
Correct.
But in case I took a loan, I repaid the loan in the same year, then I'm supposed to file this return.
Yes.
Okay, because there are figures in there.
Yes.
Okay, so that is the catching point over here, that if we are taking any loan and we are going to repay the same, even though the balance at the end of the day is nil, we are supposed to file this return. Now that clears a lot of things for me and as well as for the audience, I guess. So further, another scenario which I have in my mind. Suppose like there are a lot of lending institutions, there are banks, there are NBFC, there are other platforms as well. My focus for this question would be on the NBFCs which are registered with the RBI. So if suppose a company is taking loan from an NBFC, now it looks quite straightforward, but it's not so. Since in DPT-3 there are a lot of tabs where it comes to whether it is a banking company or a company registered under Section 51 of the Banking Regulation Act. So it becomes very confusing for a company to file a DPT-3 when they take loan from NBFC. So could you just help us, me and the audience as well, like where we are supposed to report the NBFC loan, or is it to be reported first or it is not to be reported first? That's the main question here.
Sure. So first of all, yes, it is to be reported. Since loan has been received from NBFC, which happens to be a company itself, so it should be reported under the head loan received from any other company in DPT-3 form.
Okay, so the tab will say that the loan taken from any other company.
Correct.
So that is not just for a company which takes loan like intercooperative deposit. It's also for NBFC, right?
Yes, definitely.
Okay, so that's a catchy point from this session. Okay, so now things are getting much clearer, having a better picture, better frame of what is this form and what exactly it is, how it is to be done and why it is to be done. Now, here's another practical scenario which company often encounters. Like there are companies which do have long operating cycles, like the goods have been to be delivered later, that funds are delivered before the date. Like suppose in the case, there is a private limited company or a public limited company which has taken advance from a customer, and the plan is to deliver the goods or service at a future date. We have taken the funds and we have to report it somewhere. Like if we have taken the funds and we haven't reported it anywhere in DPT-3 or anywhere, the case says.
Okay, I got your question. So, advances received against supply of goods or services are not treated as deposit, provided they must be adjusted or appropriated within 365 days. If they are not adjusted or appropriated within the prescribed time limit, that is 365, then it would be termed as deposit and it should be reported under the deposit head in DPT-3.
Okay, so the deadline is 365 days.
Yes,
Okay.
it should be appropriated within the 365 days period.
Yeah, so if we are going to have any long-term projects which goes beyond 365 days, so we have to report that kind of advance in our DPT-3.
DPT-3.
Okay. Okay, so now things are getting much clearer, having better picture, better frame of what is this form, why it is to be filed, when it is to be filed, and we have discussed a lot of scenarios right now. So just another question I have, and it is quite practical. It happens in most of the companies, be it a small company, be it a large company. The scenario which can be seen in most of the companies, it is a very practical scenario. Suppose there is a company which has been taken a loan from the director, say it's a private limited company, a public limited company, and we have taken a loan from the director. So does it fall under the head of deposit? Or in case to extend my question, like if there is a loan from the relative of the director, so being a private company or a public limited company, explain both the scenarios. So are these considered deposit for a company? Like whether it falls under the head deposit?
Okay, so first of all, both private companies and public companies are allowed to accept deposit from directors, provided directors should furnish a declaration that this is not out of borrowed funds and this should be their own funds. Further, in case of relative of a director, then only private companies are allowed to accept loan from relative of a director and it would be treated as exempted deposit.
Okay, so picture is like if a private limited company has been accepting any loan from the relative, it would be accepted. Public
Yes.
limited company scenario is quite different. Moreover, coming to this point that loan from the directors, in both the case, be it a public limited company or a private limited company, we do have to furnish a declaration that the funds which the company has been procuring from, it is from the director, it's from its own funds, not
Own
from a borrowed
funds,
funds.
not borrowed
Okay.
funds.
Now moving forward, now this is something which comes even seasoned professional, debentures. Now debentures, even company releases into debentures, there are different kinds of debentures, there are different characteristics. How we do report this or treat them in debentures? Like there are a lot of categories and all. So how do we bifurcate them in DPT-3?
So let me explain this into three parts. First one is secured debentures, second one is unsecured debentures, and the third one is listed debentures. So in case of secured debentures, they are treated as exempted deposit, whether they are convertible or whether they are non-convertible. Talking about the second one, that is unsecured debentures. So if unsecured debentures are convertible, then they should be converted within a period of 10 years. If that period goes beyond 10 years, then it would be termed as a deposit. And the last one, that is listed debentures, so they are exempted in all cases.
Okay, just to sum this up, secured debentures in all cases are not termed as deposit. Listed debentures also in all cases are not termed as deposit, but the unsecured debentures which are getting convertible beyond 10 years would, or NCDs in the other cases, would be termed as deposit.
Deposits.
Okay, that's quite a great clarity on the debentures topic, considering the characteristic, the features, and all this in DPT-3. So thank you so much for these debentures. Okay, so we have completed and covered a lot of things in regards to DPT3. Just to sum it up, let's have a quick wrap of what we have discussed till now. The first thing is the DPT3, where we have to report our borrowings, which the company has taken, and it has to be reported before 30 or 38 June. Correct?
Yes.
Further moving forward, it is applicable for all companies unless we have exempted in the category. We have discussed the list and the companies which are exempted from filing the CPT return. Insurance companies are also covered in the DPT return since they are not explicitly
Exempted.
correct. Then comes to the NBFC, where we have taken loan from NBFC, we have to report that. In which head we have also discussed this, that the company has to report a loan from any other company. Coming further, in case of nil return, that if the company has no return, there is no need to file such return. But in case if the company has taken a loan, repaid the loan the same year, we have to report the same. And moving further, the loans from the directors of the company, the relatives of the directors of the company, they have to be reported. They are exempted deposit, but obviously they are supposed to be reported in the Form DPT-3. And towards the last of these questions, coming to the DPT-3, we discussed the debenture, like debenture, the characteristics, the types of debenture, and how they are to be treated in DPT-3. And the last one which we missed is regarding the supplying case, where there are advance for customers, where the goods are to be delivered, service are to be delivered later than. Remember, the deadline is 365 days to characterize whether it is a deposit or not. In case, even after all this discussion, if we have missed anything, I would request our audience to just drop in the comment section of this channel, and you can ask any queries if there are any on your end in regards to DPT3. We'd be happy to address them all.